Welcome back to MasteringMHAMBA. Today we begin Chapter 5, Process Costing, adapted from Data and Rajan's Managerial Accounting, Making Decisions and Motivating Performance, published by Pearson Education. This chapter is large, so we are dividing it into Part A and Part B. In Part A, we will focus on process costing and equivalent units. In Part B, we will cover joint costs and common cost allocation. Learning objectives. In this lesson, you will learn first is when process costing is appropriate. Second is how unit costs are averaged across many identical units. Third is the meaning of direct materials and conversion costs. Fourth is the concept of equivalent units. Fifth is the five-step process costing method. And sixth is how the weighted average and FEEFO methods compute cost per equivalent unit. These topics build the foundation for assigning costs in mass production settings. Section 1, Introduction to Process Costing. Opening story, Hospital Laboratory Blood Testing Line. Imagine a large hospital laboratory running thousands of blood tests every day. Every sample passes through the same automated steps: labeling, centrifuging, chemical processing, and analysis. No single test is unique. Each unit receives the same treatment. In this environment, it is impossible and unnecessary to track the cost of each individual test. Instead, the hospital uses process costing, spreading total costs across thousands of identical units to compute one average cost per test. When process costing is used when an organization produces masses of identical or very similar units. Examples include hospital labs processing tests, food and beverage companies, oil refining plants, chemical processing, bank check clearing. In these environments, units are indistinguishable, so cost is averaged across an entire batch. Section 2, Basic Concepts and Unit Costs, Direct Materials and Conversion Costs. In process costing, costs are grouped into two categories: direct materials, the primary physical inputs, and conversion costs, all other manufacturing costs needed to convert materials into finished units, including direct labor and manufacturing overhead. This distinction is crucial because materials and conversion costs may enter the process at different times. Unit cost, averaging across many units. Because all units are identical, process costing assigns cost based on averages. Unit cost equals total costs divided by the number of units produced. This simplifies costing and provides stable, predictable cost information for pricing, budgeting, and process evaluation. Section 3, Process Costing Cases. No WIP, ending WIP, both three types of process costing cases. Process costing must handle different inventory situations. Case 1 is when there is no beginning or ending work in process inventory. Case 2 is when there is zero beginning WIP but some ending WIP. Case 3 is when both beginning and ending WIP exist. Each case becomes more complex because of partially completed units. Section 4, Equivalent Units. What are equivalent units? Equivalent units translate partially completed units into the amount of work required to produce fully completed units. For example, if 1000 blood tests are 50% complete, that equals 500 equivalent units. Equivalent units allow managers to handle incomplete WIP efficiently and assign costs accurately. Why equivalent units matter: hospitals, manufacturers, and processors rarely complete all units at the same time. Some units are partially finished at the end of the period. Equivalent units ensure costs are assigned fairly to completed units and ending WIP, reflecting the true amount of work performed. Section 5, the five-step process costing method. The 5 steps overview. Process costing follows a systematic 5-step method. First, summarize the flow of physical units. Second, compute output in terms of equivalent units. Third, summarize the total cost to account for. Fourth, compute cost per equivalent unit. And fifth, assign total cost to units completed and to units in ending work in process. Step 1, summarize physical units. The first step tracks how many units were received, started, completed, and left in WP. This provides the foundation for all further calculations. Step 2, compute equivalent units. Equivalent units are calculated separately for direct materials and conversion costs. This is because materials may be added at different stages, while conversion costs are typically incurred throughout the process. Step 3. Summarize total costs. Next, managers summarize all costs to be accounted for, beginning WIP plus costs added during the period. This helps determine the total dollar amount to assign to completed and partially completed units. Step 4. Compute cost per equivalent unit. Cost per equivalent unit equals total costs divided by equivalent units. This calculation is the heart of process costing because it determines the cost assigned to each completed unit and each unit in ending WIP. Step 5. Assign cost to completed units and WIP. The final step assigns total cost to two groups: units completed during the period and units still in WIP. This ensures accurate cost flow into finished goods and the balance sheet. Section 6. Weighted average method. Weighted average method. Under the weighted average method, managers combine beginning WIP costs with current period costs. Equivalent units include both beginning inventory and work done this period. This method blends all costs, creating one average cost per equivalent unit. Weighted average when it works well. Weighted average is simple and stable. It works especially well when unit costs do not change significantly from period to period, or when beginning WIP is small. Section 7. FIFO method. FIFO method. FIFO treats beginning WIP separately from current period work. Equivalent units reflect only the work done during the current period. This method provides more precise cost information when costs or production levels fluctuate significantly. Weighted average versus FIFO. The two methods produce different results when costs change substantially or when beginning WIP is large. Managers choose based on accuracy needs, tax effects, operating income impact, and contract requirements. Section 8. Cost flows in process costing, T accounts. T account flow in process costing. Each process has its own work in process account. Costs flow from one process to the next. Completed goods transfer to finished goods. When sold, costs move to cost of goods sold. This mirrors physical production flow. Summarizing this part of chapter. Process costing helps organizations measure the cost of producing large volumes of identical units. To do this, managers use equivalent units, the 5-step method, and either the weighted average or FEE4 method. These tools ensure costs are assigned accurately across completed units and ending WIP. In Part B, we will explore hybrid costing, joint costs, and common cost allocation. This video is adapted from Datar and Rajan's Managerial Accounting, Making Decisions and Motivating Performance, Pearson Education. All rights belong to the original authors and publisher. Thank you for watching Part A of Chapter 5. Be sure to like, share, and subscribe to Mastering MHAMBA. Stay tuned for Part B.